Hello everyone, we are Group C, and in this presentation, we will be discussing the financial statement case study of Green Golf and Country Club. This is part of our Week 8 assignment for the Accounting Business course. We will walk you through the preparation of financial statements using the 9 steps of the accounting cycle supported by theoretical concepts and key financial highlights. Before we begin, let us introduce our team. Hello everyone, my name is Ghaisani Mitsuko Nozomi.
Hello, my name is Keisha Putri.
Hello, my name is Rifki.
Hello, my name is Syafiq Hibrizi.
And together, we collaborated on this case study and prepared the following presentation. Here's the agenda for our presentation. First, we will start with a brief introduction to the case. Second, we will go over the theoretical framework behind the accounting cycle. Third, we will show the application of the 9 steps of the accounting cycle using the case of Green Golf and Country Club. Fourth, we will highlight some important points from the financial reports. And finally, we will close with a summary and conclusion. To begin our presentation, let's take a look at the importance of accounting in the business world. As stated by the American Institute of Certified Public Accounting, accounting is more than just recording numbers. It involves classifying and summarizing financial events to help interpret the results. This highlights the analytical role accounting plays in understanding a business financial health. Accounting is often called the language of business because it communicates vital financial information to various stakeholders. This information is essential for decision-making, whether it's by managers within the company or external parties such as investors and creditors. The objectives of this project are to explain all 9 steps of the accounting cycle in the context of a service business. And then 2 is to apply the accrual basis and double entry system in recording simulated transactions. Third is to accurately prepare financial statements, and last is to reflect on the importance of financial reporting in guiding business decisions. In terms of scopes and focus, our project centers on a small-scale service business and covers the complete 9-step accounting cycle within a 1-month period, using both the accrual method and the double entry system.
Accounting is very important for the running of a business because it can make financial reports more accurate and reliable. Well, this accurate data really helps stakeholders like investor or manager make the right decisions. In addition, accounting also makes business more transparent and compliant with applicable regulation such as GAAP. Then using the accrual method, business can track income and expenses systematically. Even if the money hasn't come in or gone out, and to keep things balanced, a double entry system in use so every transaction is recorded twice, one debit and one credit, so that it continues to balance. The accounting process has stage called the accounting cycle. First, we identify the transaction, then record it in a journal which contains the debit and credit. After that, the data from the journal is moved to the ledger and then check through a trial balance to make sure that total debit and credit are the same. Sometimes there are also adjustments at the end of the period, such as calculating unread income or accrued expense. From there, financial statements are prepared, such as the income statement and the balance sheet. Finally, the temporary accounts are closed so that they are ready for the next period. Okay, in this cycle, we use 2 main methods, accrual basis and double entry system. The accrual method records income and expenses when they actually occur, not when the money comes in or goes out. For example, Green Club records income that has not yet been received or salaries that still need to be paid, even though the money is not there yet. Meanwhile, the double entry method ensures that every transaction goes into 2 accounts, So if something occurs, something discourages you, this keeps things steady and makes it easy to spot any mistake.
Next is internal financial statement. Internal financial statements help management with planning, control, and decision making. Based on decision usefulness theory, they support resource allocation, performance evaluation, and strategic planning. Next, external financial statements. External statements are used by investor and government agencies to assess company performance. Backed by stewardship and information asymmetry theories, they promote transparency and informed decision making. Next, service company, Calm Green, Golf, and Country Club. What is a service company? A service company provides intangible service like membership or consulting. There's no inventory and transactions are usually simple. About Calm Green Golf and Country Club is a premium service business in Padalarang. It offers exclusive service such as access to golf course and fun dining. At the end of each fiscal year, the club prepares its financial report, covering all key financial aspects. Next is application of the 9 accounting cycle steps. First, identifying and analyzing transactions. Recorded all transactions during October 2024. Transactions analyzed to determine affected account. Classified into assets, liabilities, equity, income, and expenses. Second is general journal. Record transaction in the general journal in order. Use double entry bookkeeping. Every debit has a corresponding credit. Third is ledger. Journal entries are posted to ledger account. Help group transactions under the same account for clarity. Note, if there are two yellow colors, it is a sign that the account was affected during adjustment.
Fourth is an adjusted trial balance. The first step is to create a trial balance by moving the balances contained in the ledger to ensure that the total debits and credits are balanced and transparent. The trial balance that has been made does not yet reflect the actual financial condition at the end of the period. Therefore, an adjusting journal is required to record unrecorded or incomplete transactions. Five is adjusting entries. Adjusting entries are necessary to ensure that the revenue recognition and matching principles are properly applied. During the adjusting process, several existing accounts were affected, such as supplies, prepaid insurance, prepaid rent, unearned revenue, service revenue, and wage expense. In addition to those, we also introduced new accounts that hadn't appeared earlier in the journal, including insurance expense, supplies expense, depreciation expense, accumulated depreciation, wage payable, and rent expense. These new accounts are typically adjustment specific, especially for expenses that need to be recognized or allocated over time, such as depreciation or prepaid items being gradually used. And And the sixth is adjusted trial balance. At this step, we created a trial balance with accounts that have previously been adjusted. then record each account that has been adjusted. The adjusted trial balance forms the basis for the preparation of the financial statements. These statements reflect the financial performance and financial position of the company during the period.
Okay, after we finish the 6 step of cycle accounting, like identify and analyze the transactions, and then the general journals, and then we're posted to ledger, and then we we record it to trial balance, and then at the end of the month there is an adjusting, and then we posting into adjusting entries, and then we post again and report into adjusted like real balance. And then the seventh step is the financial statement. Financial statement are summary of accounting process prepared according to applicable standards. It contains formats of reports, namely the income statement, owner's equity statement, balance sheet, and cash flow statement. The first one is income statement. The income statement presents a summary of the entity's operating result during a specific period. It shows revenues earned and expense incurred. In the other words, this report allows us to see how well the company performed financially over a certain time. For example, if the company earned more revenue than the expense, it paid the result, it is net profit. But if the expenses are higher than the revenues, then the company experiences net loss. This helps the stakeholders evaluate the company's profitability and the operational efficiency. The second one is the owner's equity statement. The owner's equity statement is prepared to show the change in owner equity during an accounting period. It includes information about the opening balance of capital, additional capital contribution by the owner, the effect of net income or net loss from operation, and personal drawings made by the owner. This report is important because it explains how the owner's stake in the business has increased or decreased. For instance, even if the owners add more capital, their equity might still go down if the business suffer a loss of if they withdraw a large amount of for personal use. Okay, the third one is balance sheet. The balance sheet is a financial statement that describes the financial position of an entity at a specific point in time. This report is prepared based on accounting equation, which is assets equal liabilities less equity. It shows that the company owns such as cash or equipment and how those assets are financed either through debt or the owner's capital. The balance sheet must always be balanced and it gives a clear picture of the company financial health at specific date, like the end of the month or fiscal year. The last one in the financial statement is cash flow statement. The cash flow statement provides details about the movement of cash within the company during a certain period, including how cash is generated and used. And then this report is divided into three main sections. The first one is operating activities, and then investing activities, and the financing activities. While the income statement is based on accrual accounting, the cash flow statement focuses on actual cash transaction. That means even if the company reports a loss, it will still have a healthy cash flow if it received enough payment or funding. This statement is crucial for understanding the company's liquidity and ability to cover short-term obligations. Okay, next is the table of income statement. As we've just discussed, the component of the financial statement. In the following table, we can see that the company report a net loss, which results from expenses that were significantly higher than the revenues earned during the period. And then the owner's equity statement. Net loss incurred by the company directly reduced the amount of owner's equity. This reduction is reflected in a lower equity balance at the end of the period. Additional capital contribution from owners can help partially offset the effect of the loss. However, even the added capital net loss will lead to an overall decline in total equity. And next is the balance sheet. The balance sheet still shows a balance between total assets and total liabilities and owner's equity. Net loss incurred by the company during the period led to a decrease in the equity section. This shows that operating loss have eroded capital, weakening the company's financial position. If losses continue, owner's equity may decline further, and in the long term, this may impact the company's ability to survive or grow. And the last is cash flow. The company has a net loss. This does not necessarily mean that the cash flow is also negative, because the cash flow statement takes into account cash-based transaction, not accrual. The company is in stable cash position to support further operation or investment next month. And future focus should include sustaining high operating cash inflow and the efficient use of capital investment and monitoring withdrawal to maintain financial stability.
Okay. Closing and tires. The closing journal is the final part of the recording process in the accounting cycle, which is carried out at the end of the accounting period. The main purpose of the closing journal is to close the balances of temporary accounts, such as income, expense, and prefers, so that these accounts are not carried over to the next period. By closing, the balances of temporary accounts will return to zero, so they are ready to be used to record new transactions in the next period. Okay, post-closing trial balance. The post-closing trial balance is prepared after the closing journal has been completed and passed to the general ledger. The main purpose of this trial balance is to ensure that all temporary accounts, such as income, expense, and prefers, have been closed and no longer have balances. Reflection on the learning process, what we gained. Learning to apply accounting principles and techniques in analyzing data, understood the role of the accounting cycle in ensuring accurate reporting, improve ability to evaluate financial health using ratio analysis, learning to present financial information in a clear and structured format, develop key skills, data analysis, teamwork, and communication. The challenges we face is difficulty preparing the cash flow statement due to complex transaction. We initially struggled to properly record and categorize cash inflows and outflows in the cash flow statements. Needed extra time to ensure all transactions were properly recorded.
And we're here to explain the conclusion. The company has successfully completed all 9 stages of the accounting cycle in accordance with accounting principles, ensuring accuracy and reliability in financial reporting. The result financial statement provides a clear, transparent overview of the company's financial health, supporting accurate and data-driven managerial decisions. Each stage of the cycles plays like a key role in preventing errors, maintaining compliance, and strengthening transparency and stakeholder confidence. And
Great. That concludes our presentation on the financial statement case study of Green Golf and Country Club. We hope this has provided a clear overview of the accounting process and its relevance in real-world business decisions. Thank you for your attention and see you later.